Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here again. Very good morning. Today will be Thursday, the 18th of April 2024. So before we start our daily dose, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. So now, before we jump straight into the short-term technical outlook, let's have a quick recap of what has taken shape yesterday and as well as today's early Asia session in terms of the cross-asset movement and as well as the data and event that impact this cross-asset movement. So let us start with yesterday, the major US stock indices. So within our expectation, the major US stock indices continue to be lackluster as it's continue to shape that multi-week corrective decline ever since the Dow Jones Industrial Average that actually broke the 50-day moving average first, followed by the S&P 500 and the Nasdaq 100 that subsequently broke their respective 50-day moving average at late last week, which is last Friday. So overall, what we could see over here is that the S&P 500 and the Nasdaq 100, as well as the Dow Jones Industrial Average, together the Russell 2000, based on yesterday's closing price action, they have right now 4 consecutive session of daily closes on the downside. That means 4 consecutive session of lower daily closes on the downside. And if you look at the higher beta, Nasdaq 100 is actually leading the fort together with the Russell 2000 in this ongoing potentially medium-term multi-week corrective decline phase. So overall, the Nasdaq 100 actually from its current all-time high that was printed close to about 4 weeks ago is actually down accumulated loss of negative 5%. All right, so given this kind of magnitude and in terms of quantum and pace of decline, the odds has indeed increased for a multi-week corrective decline. Perhaps it may start to actually come down very close to the 200-day moving average next. Okay, then the dollar was actually quite mixed yesterday. Bear in mind that in the shorter term, we also do expect this kind of movement. Why? Because of that potential dollar strength setback story that I highlighted at the start of yesterday's daily dose, which indeed we start to see a rebound taking shape into the euro dollar, the sterling dollar, as well as weakness on the dollar yen, together with some strength of bounce on the Aussie dollar yesterday's session and stretching into today's early Asia session as well. So now, what's up next for the WTI crude oil? So WTI crude oil yesterday, surprisingly, it has actually tumbled negative 3.5%. So this is its worst daily loss since early January this year, to be precise, will be since 8 Jan 2024. So one of the reasons that kickstarted this rather steep fall yesterday was due to a much more increase in that weekly US stockpile by almost twice the amount against market consensus. So later I share with you the key the economic data, okay, that was released yesterday. The EA, the energy, the US EIA, the agency that's in charge of compiling these weekly US stockpile numbers. All right, then interestingly, also based on inter-market correlation factor, will be, as we know, that the major US stock indices has been pretty much driven by AI optimism play, and this AI optimism play also has a very, very strong foothold globally as well. So with the likes of Nvidia, AMD, all staging we call it a beggar return against the benchmark US stock indices, which also primarily drive up the Nasdaq 100 as well. So one of the particular key components that is not related listed in US, but it do have a positive feedback loop because it's related to the semiconductor space, which is called the ASML. And bear in mind, ASML has a very unique proposition in the semiconductor space. Why? Because globally is they only produce this very unique machine that are able to design higher level of semiconductor chips, and they, in a way, Nvidia is kind of pretty much reliant on them as well. So yesterday, ASML is actually listed in the Dutch exchange, like I say, because it has a particular very significant foothold in the semiconductor industry. So yesterday result was kind of lackluster. So let me share with you this ASML. So ASML actually orders dive as chip makers pause high-end purchases. All right. So that actually has a negative feedback loop into the US semiconductor stock. So that actually explains why the drag on the Nasdaq 100 yesterday, which was actually the worst performer by having a daily loss of negative 1.24%. So if you look at the heat map of the S&P 500, what we could see is that the one that is glaring in deep red will be the semiconductor space within the technology sector. So definitely Nvidia is the one that is getting the worst hit, down negative of almost 4%. Okay, negative 4%. And given the fact that Nvidia has now the third heaviest weightage stock in the S&P 500 and the Nasdaq 100, definitely it has a significant impact on the short-term and medium-term performance of this two major US stock indices. All right, and also one thing to highlight over here about this ASML is ASML yesterday also broke down their geographical region revenue flows. So if you look at over here, this Bloomberg report over here, they actually compile for us. Let me expand my screen. So as know that China and US is still having this so-called ongoing tech war tension, or I would say that put in a very blunt way, is that they are still rivalry in the technology space. That means, i.e., neither one of them want to have an edge in getting very highly sophisticated semiconductor chips know-how as well as the design. So, but what's interesting over here, despite the ongoing US sanction and lobby, where they actually advocate their airlines to not to supply key component know-how and technology as well as knowledge in the in cutting edge semiconductor chips, or be it design or knowledge. But China remains the top destination, or remains ASML biggest market, despite export controls advocated by the US. So what is telling us over here is that, very interestingly, there is some way that some third party or some whatever so is helping ASML to navigate this export control. So given the fact that, do not forget that US election is coming to the forefront this year, so we do expect more kind of hardcore rhetoric, both by the Biden administration and as well very likely Trump, who is going to be the appointee on the Republican camp, to advocate for this kind of forceful sanction against China in terms of this high technology space. So going forward, geopolitical risk tension from this ongoing US-China trade war, I do believe that it's going to be up by a significant level in the second half of this year, which also potentially could add more higher volatility into risk assets. That means, i.e., volatility increase, potentially we may start to see much more of kind of volatile downside movement as well as upside movement going into the second half of this year. Okay, so this is the intermarket relationship, taking into account the fundamentals with respect to geopolitical risk premium factor, right? From what I see right now, based on the ASML latest numbers. All right, so now this is the US market. So what do we have for the oil? So for oil over here, let me immediately, yeah. So this is the, okay, so let me expand my screen. Yeah, so you should be able to see 106.75. So this is the oil, the weekly crude oil stockpile change. So yesterday number actually increases much more significantly, almost doubled of what market is expecting at 1.6 million. So it increases to 2.7 million. So if you look at the trend of that weekly stockpile change, so it's actually reporting every week. Okay, let me load up. All right, so it has actually four consecutive week of weekly gain so far. And yesterday's weekly gain report was actually almost doubled of what market consensus is expecting of only 1.6 million. So that actually explained that that negative drag on WTI crude oil price yesterday, which also broke our short-term key support level at 83.20 US dollar per barrel. So very likely there could be some form of weakness, short-term weakness coming back into this WTI crude oil prices from a short-term technical outlook perspective. So later I'll share with you guys the short-term technical outlook on WTI crude oil price. So other economic data releases that could impact the FX market yesterday was that core inflation number out from UK. So bear in mind that yesterday we do expect a bit of bounce on the sterling dollar. So the sterling dollar actually did shape a minor bounce as expected. Why? Because the core inflation number almost came in within expectation of what market is expecting. So market expecting around 4.1%. So the core inflation number came in a slightly higher, I would say more or less within the range number, because it's only a difference of 0.1% at 4.2%. So if you look at the core rate trend, the trend or the long-term trend of that inflationary pressure in UK is been slowly decelerating on the downside. All right, and yesterday 4.2% number for the month of March is the lowest since December 2021. So if you look at the trend, the 5-year trend is clearly decelerating. So the amount of deceleration is much more pronounced in UK over in US. Well, US still showing pretty much elevated sticky inflation number. So that potentially in a longer term perspective, we may start to see further US dollar strength coming into the picture. Because why? Because right now we will start to see outlayer central banks policy among the central bankers. That means Bank of England as well as the European Central Bank (ECB), they will be the first these are two banks will be ahead of the Fed in terms of igniting their interest rate cut cycle. Okay, very obvious, being supported by this deceleration of inflation number in UK. And also yesterday, also further solidifying this potential longer term, medium term, a higher time frame medium term dollar strength coming picture is the finalized eurozone inflation rate figure. So the core inflation rate figure, no change, it came in at 2.9%. That was the amount, that was the number that was being flashed out earlier on 2 weeks ago. So if you look at the core inflation number in eurozone, okay, where is it? Okay, over here. Okay, it's also indicating to us that it's also decelerating at a rapid pace as well. So that number is actually the lowest since February 2022. All right, so if you look at the trend, the 5-year trend of the Eurozone core inflation rate, very similar deceleration path and quantum as seen in the UK. So that actually explained to us very high chance there could be a cut much earlier than ECB and BOE, somewhere around June or July, ahead of the US Federal Reserve. So right now, the US Federal Reserve, like I highlighted earlier on, the US Fed, very unlikely it will cut in May, in June, or in July. So the next cut will come in September. So how do we know that? Okay, I repeat again, you go to the CME Fed Watch tool. So it's a free tool over here. It's not live. It's about 1 or 2 hours delay. Based on the calculation, they calculate from the Fed funds interest rate futures market. All right, so based on the pricing of the futures market, the interest rate futures market, which is the Fed funds futures market, okay, the 30-day Fed funds futures pricing data. So if you look at over here, the combined probability tab, the amount of East that has the highest number above 50% is September. So previously, right, market is looking at March. So March is being kicking down the calendar from June. So right now, even June is already at only 16%. July less than 50%, around 46. So the one that is a higher one is 71%, will be in September. And mind you, only this year we're only looking at only one rate cut in 2024. Okay, initially the rate cut is being priced at 6 at the start of this year. So potentially there could be even no cuts at all in this year. All right, potentially if inflation expectation continue to push up to the upside. And also do not forget, the later the Fed cut, it will be subjected to US politician calling it as a puppet, with puppet as in because this is US election. So some lawmakers will actually lobby it, the independence of the US Federal Reserve. Are they because they choose to cut later because they want to cite the current administration. Well, that's more for a political standpoint of view. All right, but we know that the US Federal Reserve hands are pretty much tied right now, and potentially that Fed dovish pivot optimism has been greatly reduced, and that also explain its on the current potential multi-week or medium-term corrective decline phase that is unfolding in the major US stock indices that could actually act as a drag on global stock indices as well. Okay, one more key economic data that I will share with you all that is being released before the start of our daily dose today is related to the Aussie dollar. So the Aussie dollar potentially would also continue to remain weak from a longer term, medium term perspective. Why? Because we start to see job numbers in Australia getting lackluster. All right. Why? At 9:30 a.m. Singapore time today, there's a release of that employment change data. That's the job data in Australia, the key job data metrics in Australia. So initially, market is expecting a monthly added figure of 7.2k, but instead it came in at negative 6.6k. All right. So if you look at the trend, okay, of the unemployment change, all right. So it starts to actually drop for the month of March. All right, so instead of having very constant every month of new amount of job added into the Australia economy, so right now you'll see some uncertainty in the job market in Australia, given the fact that after 2 consecutive months of gain, it start to see a weekly decline of negative 7 how is it negative 6.6k. So that is actually way below the consensus, or where consensus is looking at a positive gain of 7.2k. So given the lackluster job market in Australia, or the Australia economy, very likelihood the RBA will start to reduce its rather hawkish rhetoric at the start of this year under the new governor. So that could also potentially put pressure on the Australia dollar as well going forward in the longer term and medium term perspective. All right, so with that, now let us straight jump into the short term technical outlook. I already covered the fundamental space. Okay, so let us start with the FX market. So like we call the FX market yesterday, we do flip to a short term dollar strength setback or dollar strength pullback story, which indeed takes shape. So let us start with the euro dollar first. All right, euro dollar. Okay, so before we start into the chart, let me expand my screen so that you guys could see much clearer. Okay, so this is the euro dollar. So the euro dollar bounce as expected, all right, from that 1.06 short-term pivotal support that we have yesterday. So the bounce already take shape, hit the first resistance level at 1.0670. Then I do have a second resistance at 0.725. So right now, as long as this bounce is coming very close to the 0.725, and as well as the RSI is also coming close to the overbought zone. So with that, potentially this bounce more or less has really lived up to its potential. And do not forget, we're also looking at only a minor corrective counter trend rebound scenario within its short-term downtrend phase that is still intact. Why? Because the price action is still trading below the 20-day moving average. So with that, I'll be using 1.0725 as my short-term pivotal resistance for today, flip back to a bearish bias on the euro dollar. So as long as 1.0725 short-term pivotal resistance didn't surpass the upside, flip back to a short-term bearish bias, euro dollar. First support level to watch for sure will be at 1.06 level. A break below it exposes 1.0525, which is a 1.382 Fibo extension level, and as well as the lower limit of this medium-term descending lower limit of this medium-term descending channel that I drew from the high of late December last year. All right. However, hourly close above 1.0725 will actually invalidate this short-term bearish bias to see the continuation of that minor counter trend rebound scenario to give a retest at the 20 and the 50-day and the 200-day moving average, or acting as a confluencing at the next resistance level at 1.078 followed by 1.082. Okay. Sterling dollar. So sterling dollar also going to bounce over here, but it didn't hit the first exactly come close to the resistance level at 1.05 1.2520. So no change, any bounce as long as it didn't surpass 1.2520, that will be the short-term pivotal resistance that we have for today. Flip back to a bearish bias on the sterling dollar, first support level to watch for sure will be yesterday's short-term pivotal support level at 1.24/1.2380. That a breakdown below it exposes 1.2350 next. Only an hourly close back above 1.2520 will invalidate this today's short-term bearish bias to continue its minor counter trend rebound scenario for potentially the next resistance to come in around at the 200-day and the 20-day moving average, also confluencing with the next resistance level at 1.2560, followed by 1.2595. Okay, now Asia Pac currency will be the Aussie dollar. So Aussie dollar bounced as expected and hit the resistance level at 64.40/64.60. So I'll be using 64.90 as my short-term pivotal resistance for today. Flip back to a bearish bias on the Aussie dollar. So 64.90 is pretty clear level, former support level broken, tested, and that level tested and kickstart that last down mover. All right, so 64.90 as my short-term pivotal resistance level. As long as this level didn't surpass today, we will be flipping back to a short-term bearish bias. For sure, first support level to watch will be at 63.90. A breakdown below it exposes 63.55. Okay, so what 63.55 is in fact this a major descending trend line, ascending trend line support that I drew from the low. If I go to the daily chart, it's much clearer. Okay, oops, from the low of October 2022, and this ascending trend line now is acting as a support level at 63.55. All right, only an hourly close above 64.90 will invalidate this short-term bearish bias to see the continuation of this minor counter trend rebound scenario to play out again. Next resistance level to watch will be at 64.45, followed by 65.90. So 64.45 also pretty much key. Why? Because it's confluence with this three branch of moving average, I think as very similar to, very close to 65.45 resistance level, which is the 20, 50, and the 200-day moving average. And also in terms of the Fibo retracement, taking into account of this entire short-term down move from the high of 9th of April all the way down to this Wednesday swing low, 65.45 also correspond to the golden ratio of 61.8% Fibo retracement. All right. Okay, dollar yen. So recall that dollar yen, we also have that bearish bias in line with that dollar's strength setback story that we have yesterday. So the dollar yen almost come close to our short-term support level that we highlighted to play this dollar strength short-term bearish, short-term we call it bearish bias or pullback. 153.80 almost hit. So with that, we'll be flipping back to a bullish bias on the dollar yen. Okay. I don't want to use 153.80 as my short-term pivotal support level. Is too tight. I'll use 153.20, correspond to the lower limit of this short-term ascending channel that I drew from 5th of April low, and as well as the former minor range resistance of 11th of April to 12th of April now acting as a pullback support. So as long as 153.30 short-term pivotal support holds, we'll be flipping back to a short-term bullish bias on the dollar yen. First resistance to watch 155.10, one-time Fibo extension level, as well close to the upper limit of this ascending channel as well, followed by 155.70. Only an hourly close below 153.30 will negate the bullish tone to see the extension of this minor we call it a mean reversion decline scenario to going to play out to expose the next support level at 152.70. A break below it, see a potential retest at the 20-day moving average at 15220/15195. Previously, that key major resistance now turns into a pullback support level. So net, all in all, in the FX space, we do now start to see some form of dollar strength coming back into the picture. Okay, now major stock indices. So let us start with the currency first. Hong Kong 33, Asia stock indices, Hong Kong 33, which is the Hang Seng Index, So yesterday we maintained that we have that short-term bearish bias. First support level to watch 16,135/70, almost met before shipping that strong bounce in today's Asia session. And right now is kind of being is testing the 50-day moving average and as well as the resistance that we highlighted yesterday. So for sure, this is a kind of key pivotal resistance that indeed is important in order for the bearish pressure to hold on the Hong Kong 33. So as long as this level is not surpassed to the upside, we will still maintain that short-term bearish bias for today on the Hong Kong 33 index, which is the Hang Seng index. First support to watch for sure will be at 16,135/16,070. Below it exposes 15,950, which is the minor congestion area of 14th of Feb and 16th of February. Only an hourly close above 16,460 will negate this short-term bearish bias to see another round of choppy counter trend rebound scenario unfolding, retesting the 20-day moving average in the first step at 16,655. Above it exposes 16,850. So what 16,850 graphical resistance over here, followed if you do the Fibo retracement of that last decline from the high of 10th of April, that also corresponds closely to the golden ratio of 61.8% as well. All right. Now, what's interesting over here will be the Nikkei 225. So the Nikkei 225 has really hit the almost hit the support level that we highlighted, the second support level that we highlighted at 37,580, and it also hit the lower limit, slightly surpassed the lower limit of the minor descending channel as well. Okay, so this the 7,580 also correspond to a very key major trend line, which is ascending trend line support level that I drew from the low of 4th October 2023. Okay, 4th October 2023. Okay, this dark gray line here. Okay, so given that there's a confluence of support, graphical support coming in at 37,580, coupled with a very strong bullish breakout that's being seen on the hourly RSI right now. Over here, there's this bullish breakout after hitting this oversold region. So indicating to us there's some form of short-term bullish momentum coming back into the Nikkei 225 or the Japan 225. So with that, right, we'll be flipping to a short-term bullish bias, potentially looking out for a potential counter trend rebound first. Why? Because price action is trading below the 50-day moving average, but so far the 20-day moving average hasn't cut below the 50-day moving average yet. So indicate to us that it hasn't really confirmed into a medium-term downtrend phase for the Japan 225. But with that, we are taking things one step at a time to play that potential short-term rebound scenario. As long as 37,580 holds for today, short-term rebound scenario, first resistance to watch is almost coming very close to it, really at 38,175. A break above it exposes the next resistance zone at 38,640/800 in the short term. All right. Only an hourly close below 37,580 will invalidate this short-term, we call it a counter trend rebound scenario to continue its bearish impulsive downmove sequence to expose the next support level at 37,000, followed by 36,650 level on the Japan 225. All right, so European indices, which is being represented by the German 30 or the German DAX. So yesterday, the German DAX going to trade sideways, but managed to reject the first resistance at 17,950. So no change. I'll be still using the upper limit of this minor descending channel that I drew from the current all-time high area at 2nd of April. 18,080 will be my short-term pivotal support resistance level, not support level, resistance level. So as long as this 18,080 short-term resistance level didn't surpass to the upside, still maintain that short-term bearish bias on the German 30. First support level to watch will be at 17,750, corresponding to the 50-day moving average. A break below it exposes the lower limit of this minor descending channel at 16,630, also confluencing with the minor swing low of 5th of March, 6th of March, as well as 7th of March. When an hourly close above 18,080 will invalidate this short-term bearish bias to potentially kickstart a more substantial minor counter trend rebound scenario for the German 30 to potentially see a retest of the 20-day moving average, also conversing on the resistance at 18,210, followed by 18,310 if 18,210 is being taken out on the upside. All right. US indices, the Dow Jones Industrial Average or the US Wall Street 30, we call in our platform, still no change, trading below the first resistance at 38,020. So kind of sideways yesterday. So I don't want to use 38,020 as my short-term resistance too tight. I will still use 38,340, which also confluence with the upper limit of this minor descending channel that I drew from 1st of April. So as long as 38,340 didn't surpass to the upside, we still maintain that short-term bearish bias on the US Wall Street 30. Next resistance, next support level to watch will be at 37,390, followed by 37,165, which confluence with the lower limit of this minor descending channel, and as well as the congestion area of 17th of Jan and the minor swing low area of 21st of December and 18th of January. Only an hourly close above 38,340 will invalidate this short-term bearish bias on the US Wall Street 30 to potentially kickstart a minor counter-trend rebound scenario to seek a retest close to 38,660. Above it sees the next resistance coming in at 38,930, which confluence with the 20 and the 50-day moving average as well. All right, Nasdaq 100. So Nasdaq 100 hit the support level that we highlighted yesterday, 17,500, and it did a bounce. So over here, we will have a tighter key short-term pivotal resistance for today at this previously minor support level where it actually broke down and see yesterday's steep intraday sell-off. Okay, so this level will be pretty key in terms of technical, we call it perspective. So as long as any bounce didn't surpass 17,690, that's our key tighten short-term pivotal resistance today. We'll still maintain that short-term bearish bias. First support level to watch for sure will be at 17,500. A break below it exposes 17,360, which is the 1.618 Fibo extension level. And also graphically, this congestion area, minor congestion area of 31st of Jan and confluencing with the 22nd of February minor swing low. Only an hourly close above 17,690 will negate the short-term bearish bias to potentially kickstart a much more substantial minor counter-trend rebound scenario to expose the next resistance at 17,830 slash 17,940, which correspond to the upper limit of this minor descending channel and pretty much close to the 50-day moving average, also acting as a resistance as well. All right, so net a bit mixed bag on the major stock indices. The one that is still not having that bearish bias for today will be the Japan 225. All right, on the Nikkei 225. Spot gold. All right, so for spot gold, XAU slash USD, still recall we do have that still trading that kind of a sideways rangy configuration below that 2,390 slash 2,400 short-term pivotal resistance that we highlighted. So still no change, still watching this short-term pivotal resistance level, potentially to look for this kind of bearish range bias towards the range minor range support level at 2,327. A break below 2,327 may expose the 2,003 level, which confluence with this upward sloping 20-day moving average as well, that is potentially could come close to this 2,003 level in the coming days. Only an hourly close back above the 2004 short-term pivotal resistance level, then it will negate this short-term bearish bias within its consolidation phase or a range scenario, a minor range scenario to kickstart another round of impulsive up move. Next resistance level to watch will be at 2,420, followed by 2,450. All right, so now lastly will be WTI crude oil price. So WTI crude oil price, yesterday it actually did that plunge below that 20-day moving average, and it also broke down below the minor ascending channel. Okay, now in dotted line really, because it's broken down that I drew from the low of 5th of February. So right now it will start to potentially kickstart a much more substantial minor corrective decline, corrective decline scenario, minor corrective decline scenario. So with that, we'll be flipping to a bearish bias for today on West Texas crude oil, as long as it didn't surpass 84.90 level, which is close to the 20-day moving average. I think that's as well. As long as any potential bounce didn't surpass 84.90, the next support level to watch on the downside will be 80.80. That is confluencing with the upward sloping 50-day moving average. A break below 80.80 exposes 79.25 next over here. All right. Only an hourly close above 84.90 will revive the bullish tone back again on West Texas oil for it to actually seek a retest on the next resistance at 87.70. Then above it exposes 89 level next. All right, so that's pretty much covered the short-term technical outlook that I shared with you on the broad-based cross asset classes. So what's up on the economic calendar for today? So in terms of economic calendar, I want to highlight to your where is it? Yeah, over here. Today's key economic data to look out for. Okay, let me see. Okay, so during the European session, it's pretty much quiet nothing key to look out for today, given it's a rather quiet session. But during the US session, we see a slew of Federal Reserve officials speaking at 9:05 p.m. Singapore time. We do have, let me see the timing, whether is it confirmed. Yeah, it's Singapore time, correct, definitely Singapore time. Okay, so at 9:05 p.m. Singapore time, we do have Fed Bowman speaking. 9:15, Fed Williams speaking, and at 10 p.m. we have the Conference Board leading economic index out at 10 p.m. Singapore time. That's another key economic data to look out for. And at 11 p.m. Singapore time, we do have Fed Bostic officials speaking, and Fed Bostic is one of the less dovish camp, and he's the one that is earlier leading the fort, because since even in early March and around February, he's the only Federal Reserve officials that kind of advocate only one interest rate cut for this year. So pretty much expecting to see what is his take right now. Okay, so he will be speaking at 11 p.m. Singapore time. Then thereafter will be a pretty much quiet session. Then he'll be speaking again at another seminar or whatever. So at 5:45 a.m. Singapore time in early Asia session tomorrow. And early Asia session tomorrow, we also had 7:30 a.m. Japan inflation data that is out next at 7:30 a.m. Singapore time. Okay, so then that's about it in the early Asia session. And also one particular earnings announcement that I want you all to actually take note of for today. Today will be Thursday, so in fact we possibly out somewhere around 2 p.m. Singapore time or 3 p.m. Singapore time. Taiwan Semiconductor, all right, TSMC. So TSMC, even though it's not US related, but it's a key semiconductor player in the industry, like what ASML. All right, so if Taiwan Semiconductor came in below expectation in terms of their orders, that could also potentially create a negative feedback loop into the technology related, highly weighted technology Nasdaq 100, and it could also have a negative spillover impact towards the other global stock indices as well. So something to take a note of, even though it's not a US stock, because it's a important stock within the semiconductor industry, which is TSMC. Okay, so with that, that pretty much sum up today's daily dose of market insight. So I do wish you all a great day ahead. And tomorrow there will be no daily dose. Why? Because tomorrow I'll be hosting a in-person coaching session for premium clients. So for the premium clients who have signed up for tomorrow's session, I hope to see you all at 12:30 p.m. at the great room. All right. So with that, do have a great week ahead and a good restful weekend, and we shall speak again on Monday. Thank you.